All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, October 8th. And everything in this video that we're talking about is for information purposes only, not giving out any advice or recommendations. But let's go ahead and just talk about today's price action. Again, another kind of choppy headline driven day. It seems like, again, we're getting more and more of these days like this. Clearly, market breadth, you could see on the bottom left of your screen, pretty nasty. A lot of areas again starting looking like they're breaking down more and more. We'll go through those. Let's first just talk about the technicals in the S&P. Daily chart. Not going to really see that much to kind of learn from here, other than we're just back into this range. We failed. We didn't even get to 29.65. But we definitely, that's resistance up there, and market just did not want to get there. What I talked about pre-market, and what's really been kind of helping in this headline-driven market is to watch the technical levels, and just to kind of know where certain pivot areas. And that's what I've been concentrating on the most, more than anything else, more than seeing buyers on the tape and so forth, just knowing where we've got good firm resistance. The market webs indicator is doing an exceptional job at that. I keep saying that, how it's really kind of telling us areas not to take risk, areas where the risk reward is a little bit better. That was the first thing that we talked about this morning. And if I bring up the private Twitter feed, I was talking about how there is a lower VPOC below. I mentioned two levels of resistance yesterday. Those proved to be significant. So this level, unfortunately, needs to be taken out. I think we're very close to it. Maybe that gets taken out in the overnight session. Also on the 1 hour, the signal that we got yesterday was, hey, resistance up here, resistance here. And we could not take that out, and since then we've been moving down. We did get that bounce today. Powell mentioned that he won't officially we won't officially be starting quantitative easing, but that's not how he wants to call it. But they will be increasing the size of the balance sheet by buying treasury bills, is what they announced today. The market seemed to like that pretty well. However, just like as soon as we start to rally, it seems timing is everything. We got another headline here. U.S. imposes visa bans on Chinese linked to, I'm not sure how to pronounce this name, but some abuses with this company. So, again, it's very herky-jerky. Have to be kind of, selling into any strength right now. Because you're giving an opportunity to add. But, so we are in value for the week. 28.74, which is basically last week's low. Again, the value areas and the bottom of value. This version point of control was an excellent, pivot point that we countered on last week in our trading. This week, knowing where not to take new risk, all in here, I think really proved pretty right. This actually looks like a Head and Shoulders too on the 1 hour. And then, we talked about this probably about 5 different times today, but that there was a version point of control down here, which again, I think needs to be taken out, and hopefully will be taken out in the overnight session. Again, these things like with the version point of controls, they have to get realized, especially if we're that close. All right, so those are levels to watch for tomorrow. That's what did I say, 28.74. Could be, someplace where we get to in maybe the overnight market. And I think that is a better place to add risk than in here, which is what we talked about yesterday. I continue, for my trading, I continue to try to trade extra light. I did participate a little bit when things were down a lot. This one of the worst performing groups today, you can see how this performance lined up. Again, overall down pretty decently. For all the major indices from the open, of course we did rebound, but that got pushed, that got negated with that trade headline. Also, bonds didn't really perform much better today. They were up 27 basis points, but they sold off throughout the session. Gold and silver. Silver was the best performer, but was flat since the open. And the VIX, of course, was up big today, up 15%. Gold mine, again, some of the defensive areas outperformed a bit. underperformers. Interesting. I don't have IHI in here, but medical devices, right? It just seems like this market is hurting the most amount of people right now. Medical devices has been a group that's held up very well. Now it looks like it might be falling into that 200-day moving average. So, had it bounce last week, and then just in 2 days we're actually back to those lows in the medical devices and things like Abbott, which I traded a little bit today. Again, I had one, about a 15% target, and I took half the position off in an option trade. So that's right now is the in a sideways choppy market. You have to, in my opinion, have to adapt what you're doing. You can't really look for those big winners right now because any bounce is being faded in the short term. So, and you just have to be willing to kind of cut those positions pretty quickly and not stay married to them. Other names in this group, TMO, which has been really strong, that down to the 200-day moving average. BSX tried a couple times to rally and take that next leg higher. Very good thing here. Just patting my back a little bit. I got frustrated in an option trade that I was and took it off. So didn't have a full loss in this position. Again, a name that we saw repeat option activity. Your trading system is better than option activity. I could tell you right now. You don't hear anybody talking about some of these names that saw option activity, but a lot of bullish flow in Boston Scientific. And if you did the right thing and kind of cut that position at a stop loss, you're sitting much better, I think. But really difficult. A lot of these option trades that we're seeing on the tape, you're better off not taking. Over the last, I don't know, couple months, you're better off ignoring them. And again, I don't know what the future is gonna hold for those, but really, you've gotten smashed down for the most part following option activity. So keep that in mind. There's lessons to be learned from these things, and I was mentioning to somebody today on Twitter. I said for our option activity, if these are supposed to be such good signals, why are the hedge funds underperforming the SPX so badly? So anyway, I come back to that. I hope that helps because there are so many people now following option activity as if it's the holy grail. And I could tell you, some of the biggest losses that I've had in the last 3-4 months have been because I saw something on the tape that looked, was an aggressive call buyer. So anyway, I'll move on from that. I could tell you where I've been calling this the trade war ETF. Even though it does look like it's starting to break down, but it did close below the 50-day moving average, down 1.1%. But man, there is a massive amount of money that has been going into this ETF. This is what the fund flows look like on the bottom of the screen, all the inflows. If you want to look at outstanding shares, if I put in here, we'll look at both funds, but this is USMV SO for outstanding shares. And you could see this is since the existence of the fund. People have flocked to this ETF for other reasons than the trade war, because you could see its growth from 2012. But look at over the last year, just a massive amount. That's $12 billion have gone into this fund. Similarly, if you look at SPLV, one is minimum volatility, another one is low volatility. They have slightly different philosophies in these funds. But this is also, you could see over the last year, really picked up investment as well. So that's where funds are hiding out right now. That's something that we've been talking about all year long. I don't know if that is, considering it looks like it's breaking down, if just cash is a better place while this market kind of continues to move sideways. And then also just, scalping on a day-to-day basis. You could see some of the trades. Again, I try to be 100% transparent. But I actually tried Roku calls, which I don't know how anybody trades Roku calls. The implied volatility is a 70. So I just went in stock in this one. Had a nice winner, but again, kind of get beaten up there. As well, Lulu did some trade management. Lulu looked like it was going to be a nice one today. And again, I did take a target in this one. This thing looked great at about 2 o'clock, looking like it's going to turn the corner. And then again, possibly another false signal. But again, it's why you take profits. You could see my profit target here, 450 on an adjusted price, paid 260 on Lululemon. All right, so that is it for today's recap. Again, just kind of have to take this day by day and not get overexposed into chop and sideways trendless markets. Have a great night, everybody. See you tomorrow.